President and CEO of Pembina, joining us for a virtual fireside chat, to give an update on Pembina as well as his outlook for the industry. As a reminder to all the listeners, I will be fielding and adding audience questions, so please type them in and I will start asking them. But first I'll kick it off with a few questions of my own. Welcome, Nick.
Good morning, everyone. Glad to be here, Linda.
Thank you. Maybe we can just start with what's top of mind for everyone. Given the current state of the global COVID-19 pandemic, can you talk about how the company is operating today and how operations have evolved since the pandemic was first declared in early March? And also, on the flip side, if you're seeing any sort of technology advancements or changes in processes to maybe rethink how you run your business.
Yeah, sure. We I think as many of the listeners had to transition pretty rapidly from at least in Calgary, from a downtown environment to a remote, mostly work-at-home environment. And for those who don't know, we had some pretty bad flooding in 2013, and so we after post-flooding laid those contingency plans. What if we couldn't come downtown, and so started buying laptops and enabling remote work. So we transitioned pretty smoothly within a week to working remotely, and then in the field in response to forest fires in Fort McMurray and other places, we did have a planning in place, contingency planning in place for working in absence of a district office in the field. And so for different reasons not related to a pandemic specifically, we were able to transition quite effectively to a remote work environment. Certainly the technology, I think, has, we're delighted us that we've been as effective as we have in running the business. And I'm pleased to say that as we sit here many months later, there's not an MCF of gas we haven't processed or a barrel of oil we haven't shipped. We've managed to run the business without upset or incident, and as a result, also pleased to say that we still believe we're going to be within the guidance range we initially set forth pre-COVID, which I think is a pretty tremendous accomplishment. As we sit right here and right now, I'm actually downtown. We have our all of our direct reports to our executives and up. So officers, executives, senior managers are all back downtown a number of days a week, and we're slowly as circumstances permit, and they are fluid, trickling people downtown, and we will probably bring more people downtown in September if conditions hold. And the reason we are doing that is we do feel like there is some flow, some chemistry, some creativity, some serendipity that is missing in a remote work environment that we'd like to rekindle.
All right, that's helpful context. Maybe just more big picture, stepping up a level. How does this COVID-19 and commodity price shock inform your corporate strategy going forward, and what's your outlook for the industry over the next little while?
Yeah, a couple things come to mind as you ask that question. I mean, if you just ignore COVID for a minute, and when we had the oil price shock, we were enjoying fantastic oil pricing in 2014, and then we saw that go, I think, sub 30 for a while in 15 and 16. We did develop what I call a plan B, and plan A was always, build more pipe, build more fracs, build more processing, et cetera. And plan A, in the fullness of time, will be, where we invest a lot of our capital. But during that time, we developed a plan B, which was what if the basin volumes didn't continue to grow? And the fruit that bore we're what we call our diversification projects. So, exports, conversion, turning propane into propylene into polypropylene. Looking at other conversion projects. We built some cogeneration, converting gas into electricity. And so that was kind of under the sentence, doing more with the molecules we have, not responding to more molecules coming at us. So that's Plan B. We were embarking anyway, having done a number of major acquisitions in 2017 and last year with the Kinder Morgan. Our Plan C was, now that we have these assets, let's execute the synergies, let's get throughputs up, and let's really look at our cost structure. And some of those were accelerated with our announcement in, I think, late March around cost synergies. But that was really improving our capital efficiency, and that's what we're calling Plan C, and is what we are putting a lot of time and effort into as we think about 2020 and 2021. And so maybe a little less Plan A activity, some Plan B activity as circumstances and balance sheet permit, and then a whole lot of effort into Plan C, which is capital efficiency and getting projects shovel ready for what we believe can be an improvement in commodity prices as we see, drilling rigs getting laid down in both in Canada and the U.S. We expect demand to continue to increase. Maybe it's going to take a little longer with what's going on with COVID in the U.S., but we do envision demand improving and supply, quite frankly, dropping quite dramatically. And we think that sets up pretty well for both the oil condensate and gas molecule in the latter half of 21 and into 22, which I think might be a time when we can do a lot more Plan A activity.
Well, that's a good segue into my next question. Certainly your organization is showing a lot of creativity on that front, but maybe getting back to Plan A, you've deferred some capital projects, in our view, prudently, but how and when are decisions made in terms of bringing them back into the field? And do you have a pecking order in terms of priority for the deferred projects?
Yeah, some of the Plan B projects, like the deferral of the Prince Rupert expansion. I mean, those aren't incremental volumes to Pembina. Those are incremental volumes to the Prince Rupert asset. But that's a project, for example, when we felt the right time, we could bring back, because we can support that project with existing volumes. The Empress cogeneration project that we deferred, that's something we could bring back. We don't need more volumes to do that. And other cogeneration projects we're getting shovel ready, so those might be the first things that can come back. CKPC perhaps can come back. We're waiting there for to reaffirm the economic input. So can we rely on our lump sum agreements? Is GDP on a steady and somewhat predictable recovery? And then most importantly, is it safe to put thousands of people on a work site again? And is it cost effective? So that's what we're looking for with our biggest conversion project, so Plan B project. And then the Plan A projects, the pipelines and maybe additional Duvernay plants and all that entails. We're just watching price signals and in constant contact with our customers to say, yeah, our customers might say, we don't need the capacity, we'll never need it, or we'll need it right now, or we'll need it but not right now. And so we have the flexibility, I think, to respond to any of those needs.
Okay, thank you. And maybe moving on to your base business, can you elaborate a little bit more on the integration of your KML. Where are you in terms of the synergies, and might there be potentially more opportunities either on the revenue or cost synergy side than initially contemplated?
Yeah, great question. I mean, overall, we stand behind our what we call our 50 plus 50, so 50 million of synergies not requiring significant capital, and then 50 million of achievable synergies requiring some capital. Some of the synergy assumptions look more challenged in the near term, but others are coming out of the woodwork, things that we didn't think of. Synergies on Cochin, for example, are coming at us nicely. We have a nice FX tailwind with the U.S. part of Cochin, so that's helpful, and we'll make our year one synergy targets. So I'm pretty proud of that. But others are delaying. The baseline tank expansion is something we put some money into engineering, so we're advancing that. We're not FIDing it yet. There's work to be done, but we're proceeding to try to get it shovel ready. So positioning it for FID. So I would say as a basket, it's working out as we expected.
Okay. And when I think of your company's history, you've traditionally been quite active in the M&A market when the company sees value potential in a transaction. What's your appetite for corporate or asset acquisitions right now, given pricing levels?
It's following the same pecking order that it normally does. I mean, if we can gain efficiencies, for example, we took $100 million out of our cost structure in the latter, half of 2020. We think that $100 million is sustainable through, in perpetuity. And obviously, $100 million with no capital employed is where we should be putting our effort in the near term, given other realities. We'll go after that first, and then exploitation. Some of our value add projects, our Plan B projects, are extremely accretive. So we'll pursue that, and then we're always looking at different opportunities, but always through the lens of extending our value chain and making ourselves more diverse and stronger, and those tend to become apparent to us. We don't really chase things, so it is part of our overall strategy, but I can't predict any kind of outcome right now.
Okay, thank you. Maybe you can give us an update on discussions with your current customers and how they've evolved over the past few months. We've seen a few producers in Western Canada quite challenged recently to meet financial obligations. Can you give us a sense of your counterparty portfolio and if any sort of requests for relief, including contract renegotiations, have increased?
Sure, Linda. I think mainly the focus of your question, I'm going to just assume that it's around the mid-cap space. And, we've seen most of our mid-cap customers do relatively well, like Ovintiv's share prices recovered, and almost all of them have had their credit facilities renewed, and, albeit at slightly lower levels. I think the banks have reaffirmed lines of credit. Commodity prices a lot better than they were, when as we thought about this at the time of our press release. I think it was late March, early April. So things have stabilized across the board, but correct that people have come and asked us for relief, and we have made a number of deals, but they're bargains. They're not they're not a transfer of wealth from our shareholders to their shareholders. They're win-wins, and so we've given in some circumstances some toll relief in exchange for longer-term deals or land dedications and things like that that allow us to succeed together. And so they're not relief, they're bargains, and they're bargains that are made within the context of our standing behind our 2020 guidance.
That's helpful context. And can you also maybe give us some quick thoughts on key leverage metrics and and your liquidity in the current environment? How are you thinking about capital structure going forward, as well as your dividend level?
Yeah, I mean, we're where we want to be right now. I think our Scott and Cam and our group, we were pretty decisive to stand behind our assertions on financial guardrails. I'm really proud of the work that was done. Don't regret any of it. I think we made the right calls on deferrals, on cost structure, on debt levels, on metrics, on liquidity. Certainly, our liquidity position is fantastic. And Linda, we're coming into a year in 2021 where we're going to have cash flow after all costs and dividends much greater than our committed capital. So we have all kinds of flexibility in 2021, to respond to any kind of debt pressures that we have, and I think we're in a really enviable position from a balance sheet perspective.
All right. Well, I think we're approaching the end of our time, and I'm just wondering if there's any other topics you'd like to highlight that we haven't mentioned, maybe some considerations in terms of things that investors have been asking that maybe the markets aren't pricing into your stock or considering?
Well, I mean, I would just say how proud I am of our larger Pembina team. I mean, to go through this pandemic and oil price crash and to have a very good chance of remaining within guidance speaks to the overall resilience of what we've created across really the three different commodities, oil, condensate, NGLs, and natural gas, and our diversification and the quality of counterparties that we have. That if we remain within guidance, I think we're 95-96% of our midpoint, with practically everything going against us, and to have a strong balance sheet on top of that, and then looking into 2021, if shareholders want a stable and growing dividend, we continue to be that company. So very proud of our team, and to the extent they're listening, thank you very much.
All right. Well, thank you very much for